We were talking about the SpaceX IPO roadshow is underway, and CNBC's Leslie Picker is with us this morning as the countdown to the space giant's listing on the NASDAQ 1 week from today. Hey, Leslie.
Hey, Joe. Yeah, I heard your conversation about the numbers there and the pricing. I had asked my sources the same question. Was there anything to the 135 and the 555? It sounds like there wasn't. It was just the math that got them to the $75 billion raise. But to your point, JPMorgan hosting a SpaceX event last night for prospective investors in the IPO. Chairman and CEO Jamie Dimon interviewed surprise guest Elon Musk, who joined virtually. The conversation opened with a question about why SpaceX is going public now, to which Musk responded with an answer about 100,000 satellites and the future of energy generation in space. But then he summed it all up in this exchange.
We're embarking on a massive new growth phase, and we need capital for that.
Okay, number two.
Another thing is the revenue. I also feel pretty good about the revenue projections. Meaning before, revenue was a little unstable, but now I feel like the revenue's much more predictable.
We were also able to get an exclusive sneak peek at how JPMorgan decked out its new headquarters with moon rocks and 40-foot rockets in the elevator banks. You could see that there, and space-themed sculptures around the lobby. However, there was another surprise that dropped last night as well, guys. S&P Global saying it would not change the rules for entry into the S&P 500, which is a blow to SpaceX by preventing it from fast entry into that benchmark. And that stands in contrast to what the NASDAQ did for quicker inclusion into the NASDAQ 100, which is seen as a tailwind for SpaceX, creating a cohort of forced buyers who track that index. However, the S&P has about 20 times as many assets tracking that benchmark than the NASDAQ 100. So it's very, very meaningful for this IPO, guys.
I think everybody stays private longer. The amount raised is getting bigger and bigger and bigger, and everybody's going to get in more quickly eventually.
The NASDAQ's rules were for 3 months. You had to be there for 3 months before they made an exception for SpaceX. I think the S&P 500 Global is tougher, right, Leslie? You have to be there for at least a year, and you have to meet revenue and potentially even earnings numbers as well.
But I think there's a larger issue.
Yeah, no, that's exactly right.
The larger issue I was going to say that we should be talking about is NASDAQ has a financial incentive to put it in the index so that they can get the IPO.
Right.
The question is who is...
does not.
The S&P does not.
Right.
So you have the people who do not have the incentive are not doing it. The people who do have the incentive are doing it. Who are they serving?
You think it's a real advantage for
it's an absolute advantage.
To put it in that quickly.
Yes.
100%. It is not just an advantage. It is
not forgetting the deal, but
it's an advantage to get to the deal because the New York Stock Exchange was not willing to do it
because people need to buy it.
But by the way, this is an empirical experiment. You can see New York Stock Exchange wasn't willing to do it. NASDAQ was willing to do it. Okay, so who won? NASDAQ. We'll see what the price is. But you're asking what the incentive. You have to always look behind the curtain and figure out what's happening here.
You don't immediately need to think it's conspiracy.
No, I would say
conspiracy. It's out in the public. It's you can see it in front of you.
Leslie, what were you going to add?
I'm a homer. I like the NASDAQ. I'm glad.
I was just going to say that the deal is really constructed in many ways for index inclusion. For example, to Andrew's point, it creates this market of forced buyers very quickly after it goes public, which is a bullish case to actually buy into the IPO. And then they have this lockup structure to increase the float a bit quicker to make sure that it's a bigger weighting into the NASDAQ 100 index as well, which was part of their rule change. So the entire structure of the deal is kind of made
could a retail broker,
essentially with this in mind,
Leslie,
because it is seen as such a big tailwind. And then the other thing that I'd point out too is that if you do have SpaceX in the NASDAQ 100 but not in the S&P 500, you could start to see a bit of kind of performance diversion between those two if it comprises, as it becomes a bigger and bigger part of the NASDAQ 100 but not in the S&P 500.
Could I buy 100 shares as a retail?
You can try. You can. There's no
supposedly
guarantee,
it's easier, but I know he's giving more to. I can't imagine you could buy what's it, 135? I can't imagine.
Look, there's places
that
like
an
Fidelity,
average person could buy.
Fidelity and Charles Schwab and Robinhood are all going to have some, but
That's what I mean. There's just no way, though. It's going to be the same.
But then the other piece of this is you have only a 4% float. Think about that.
Right.
One of the reasons you would only have a 4% float is to buoy the stock. I mean, there's all sorts of things happening in terms of how this whole thing is constructed on a relative basis to the full size of the company that are built around this. By the way, I could argue to you the idea that they are going to allow more retail investors into this. They're able to. One of the reasons, arguably, they're able to do that and think that it's going to work is because of the index buying on the other end. So typically, retail investors are considered sort of fast money, that they will sell right into the IPO. Right. If you know on the other end that you have an index that's going to be buying for you, all I'm suggesting is all of the sort of classic price discovery processes that take place in an IPO are going to diverge in this case. It's just different. It's just a different instance.
Giving more to retail investors.
And the demand was going to be there. I don't even think you need to do anything to try to cheat on the demand. I mean, the demand is going to be ridiculous.
Normally, Fidelity requires that you have at least $100,000 in your account for it. I think they're dropping that level to $2,000.
You still can't. I guarantee you can't get any.
It's like a lottery ticket, right?
It's like a lottery.
If you haven't, you put in for it. You may or may not. Long odds, but you might be able to get.
By the way, if I was just to be 100% clear, if I was Elon Musk and SpaceX, I would be doing this. This is absolutely what they should be doing. There's nothing wrong with what they are doing. I'm just suggesting that the other sides of this, their incentives and their motives, are not necessarily fully aligned in the same way that you would have thought around the way they used to think about these things.
We have seen so many times, we try for price discovery, but you look back a year and it's like...
Who knows?
Remember when Google was initially not nearly as hot as... And then look where it is.
Yes. And it depends on the fortunes of a very fast-growing company. I think AI, under the underwriter's own expectations, AI revenue has to increase 100 times. I mean, this is a fast-growing company, and it's hard to get your arms around where it's going to be in a year's time.